Hey traders, Raghee here, and let's take a look at what's been moving the markets today, what I've got my eye on, and what we'll be setting up for the remainder of the week. All right, so I talk about a mixed picture in the markets right now because I am still long the NK. I am still very much long the NQ. This has been a great trade to the upside for us. Thank you very much, Amazon. Think about the fact that Amazon is the third heaviest weighted stock in the Qs. So certainly that slightly higher high and Amazon hitting the all-important 1,000 level. It's only psychologically important, by the way, but that sure did help NQ. So that buy that we had from 55.55, 55.85, that 30-point zone, here we are knocking on the door of 5,800. Fantastic level for us. We're just continuing to trail the stop. For those of you who are wondering, okay, Rog, what about the Nikkei spinning its wheels? It is. We've already hit some profit targets here at 15.7 and 15.8. Am I open to re-entering around 19.455? I sure am. And part of why I think we could get down there is the fact that if we roll over through 21,000 and we get a little bit more of some of this emerging markets conversation, a little bit of scare there, we could see the Dow head down to 800. 805 is my primary target for this short here. 20,805. This is actually the fourth time we're shorting this. If I end up going 3 for 4, you know, 3 wins and a fourth loss, that's fine. Where would I go ahead and pull the plug on this trade? 21,125. Okay, 21,001. But my target is down here at 805, and that's what I'm rooting for, obviously. So what else do we have here? Well, I think one of the conversations that we have to have is the fact that gold and some of the commodity dollars have decoupled from the global equity strength that we've been seeing. And when I say decouple, that's just a fancy way of saying some of the historical correlations that have been valid just aren't working right now. You know, you would think that on a day that the markets are more or less pretty heavy, except for the NASDAQ, and again, thank you very much, Amazon. But I think when you look at the weakness in gold, it kind of reflects there's a little bit of lethargy, a little heaviness in some of these equities markets. It's in the US, and I'll throw the Nikkei in there as well. A little bit of a pullback on the DAX as well. Lots of weakness from the Australian equities markets. And there is a huge part of the decoupling. Why is not the gold market and the Australian dollar heading higher in what seems to be overall risk appetite? It's this decoupling. So I like the gold short. I like the Australian dollar short as well. Now, do I like it against the US dollar? I actually don't. I don't want to short the Aussie against the US. So let me show you what are our alternatives. We're futures traders, so I don't want you thinking I'm leading you into the Forex market, although certainly Euro versus Aussie is an easy play there, but you can play the EAD futures. Okay, you can play the EAD, so EADM17, and you look for opportunities to buy Euro, sell Aussie in this really nice looking uptrend. All right, so that's my preferred way to watch this market. Again, a decoupling of gold and the Australian dollar, and you don't have to look much further than the TIO market. Some of you may not be familiar with this. I don't trade this market. This is the September contract of, as you can see, iron ore. We've had 2 weak months of Chinese manufacturing. Iron ore rolled over already. Take a look. We rolled over. You can see these little specks. I know it's hard to see. We rolled over. Look at where we start to plot these red grab candles. That's all I need. I know it's just a little dash. Like it looks like Morse code. It doesn't matter. As we see this roll over, see Chinese manufacturing kind of slump a bit. That's going to be a negative to the Aussie, and we're seeing it reflected and confirming in iron ore. So there's a little bit of a decoupling. So I don't mind that gold is weak on a day that you might think, hey, why isn't gold stronger? It's not linking up, and that's actually baking a lot of noodles. It's confusing a lot of traders in terms of what's happening there. Another thing I talked about in the chat room where a lot of our traders were short was this overbought area. It was a midpoint fatigue level. Okay, Rog, what do you mean by that? One of my favorite things to do is grab a Fibonacci retracement from the last major move, which would be this high right here, to this low down here. And then I grab an area that represents the 618 to 382 correction. And I know that that's a fatigue zone. And then on top of that, I've got the benefit of this overbought area because of these highs, these previous highs. Now, you can look for puts on GC, you can look for puts on GLD, or you can flat out short GC, GLD, or even the YG mini futures. This is a level, and the higher we get to that overbought level, the better your risk reward, the better RR is waiting up there. Okay, and again, I don't mind shorting this because we've seen that decoupling. Last conversation I want to have with you for this free video is Euro US. Nobody can job own a currency like Mario Draghi. I think he does webinars about this on the weekends for other central bankers. He's that good at it. We had 11.25 long position. Thank you, Mario, for driving the euro lower. You can see this on the EC futures. You can see this on FXE. And the thing that I love about what happened with this is a lot of traders, maybe getting too bullish on the dollar, forgot that the euro is in an uptrend, and it is at the very beginning stages of, I think, a massive move to the upside to come. So my traders in from 11.25, go ahead and step out at 11.95. That's an easy peasy 70 pips on this one. And let's just see when the next pullback is going to happen so we can get back in again. On a bigger picture, for those of you thinking, Rog, I wasn't in that, don't worry. See where we are right now? Gang, this is the foothills of a move that I think conservatively can take us up to 125 and even more ambitiously, the 130 handle. We are in the very early stages of this, gang. Just be patient. Don't look for those higher highs. Buy the pullbacks, and we are going to find ourselves riding a pretty nice, I won't say rocket, but a nice stair-stepping up as the taper for the ECB comes to light. Don't worry about Mario Draghi talking the euro down. Those are our opportunities. All right, I'll see you in the next update.